Happy Thursday, everybody. I missed you guys last week. I promised my wife last Thursday that I would go on this trip that she'd booked and would not come on the Academy call. And I didn't have as much fun on the family trip as I would have done if I was hanging out with you guys. So great to see you all again. Great to see Clive sporting that retro England shirt. That's from like 2000s, I think, Clive, when we whooped Germany 5-1 away. I was at that game. I was wearing that very, very shirt. Good to see you. Yeah, I know. Good to see you. We got David Giroll. We got Otis, Chiron, Sam Davis. Loved your testimonial in Facebook. We got Lewis, David Vario, Lorenzo, Steve, Jonathan Walters, JR East, who I spoke to earlier on today, who's doing something like really, really cool. We've got Toby Carmen, John Shefflin. I love John Shefflin. He's so cool. Jerry Barber, how you doing? Leo Rich. Too many other people. Have we got John and have we got Sarah? John, are you on? No? John McElroy, where are you, my friend? Don't see him. All right, well, I'll just keep talking for a little bit. So, I had a great week on vacation. It's good just to down tools and do some stuff back into the zone. A lot of really cool stuff going on. We're ramping up the production for the Kings of Deals program. Looking forward to the protege call on Monday. I'm going to be doing that mindset training that I built just before Abraham decided to come in and do that. How cool was Abraham Gray with those letters? And it's great to see you guys implementing some of that stuff, like Toby with his little kind of keychains going into the letters and stuff. I can't remember who it was. Somebody I saw on Facebook, those bird letters, they were targeting like fire companies and stuff. I thought that was like really, really cool. So it was good.
So that was Annabelle.
Yes, Annabelle Morin, you legend. And John, good to see you. How you doing?
Excellent. Fantastic.
Yeah, I watched the replay for last week. The deals were really interesting. I do miss these calls. I miss these calls a lot. So, when I'm not on a plane, not being dragged off by my family on a trip in a boring museum, which happened to me last week. It's good to be on these calls. So lots of activity in Protege. Clive's top of the leaderboard, closely followed by Iwo. I know Toby's up there, as he always is, and a lot of other kind of familiar faces. David Vario, David Girold, Lewis, they're all up there. So nothing else for me to announce. John, I don't know if you want to plow straight into the deals. I know we're always a little bit short of time to kind of get the 3 deals in.
Now I understand we're flying solo this week. Sarah's away, so
Sarah's in Alabama inside of the new business that I just bought with her and Chris Moore. So we bought a bowling alley.
I asked her to send me some pics. I don't know if she did or not, though.
Yeah, I was on a call with them this morning and they're freaking bowling. I'm like, thought you were like setting up ABC XYZ, who just hired a GM, they're onboarding him. It's a really, really cool business. So we took ownership of the business. And in the first weekend, broke the record, highest sales on a weekend ever in the business. Like, we're going to absolutely blow that thing up like crazy. So one of the really cool things, I don't know if I talked about this, one of the really cool things we're doing is in America, you got this big chain called Dave & Buster's. Have I talked about this before?
Yeah.
Okay, all right. Well, so we're doing that. We're putting like a Dave & Buster's style arcade thing inside of the business. Literally, Chris Ford, he doesn't mess around. He's in there within a day, the walls were down, new stuff's going up. He's already on the phone to the machine rental company, like all that stuff in order and it's all coming in. Sarah's in there wizarding all the books and the processes, merchant accounts, hiring the GM and doing all that stuff. Sad thing is, it's going to be mid-November before I get to go there. I've been in the bowling alley. I've bowled in there. I've met the previous owner. I know all about the business, but so I'm traveling so much right now. I'm going to Australia in the next week, a couple of weeks, hence why we're moving the calls a bit later, so I could be on them. And it's going to be mid-November before I get down there. So it is what it is. So what we'll do, John, if you want, is trade me off with our coaches in here. So Toby, Wayne if he's on, Jeremy if he's on, Ollie if he's on. I know Eric's on the call. Happy for you to trade me off with some of those people, or some of our resident superstars, not yet coaches, but have done deals and always have great insights, like Cole Brown and David Giralt and David Vario and Chuck and JR and Carmen and Otis and all those guys and Steve. So happy for you to kind of run it the way you want to do it. But I'm happy to go first on all the deals if that's what you want.
Sounds good. Yeah, well, we'll get lots of people involved. We have 3 interesting deals. So yeah, let's get at it.
I better print out my note sheets. I'm not organized this week.
I can tell you're not organized because we don't have the share screen going.
Yeah, I know. You can tell I'm rusty. I missed a week. I'm rusty. Right, so I've screen shared. I'm going to print a note template. Guys, if you've not got the red light, green light notes template that I use when I'm making my notes on deals, I uploaded it into the Facebook group. So definitely download that. It's just a great way that you can kind of organize your thoughts before you vote on a particular deal.
Okay, we do have a few newcomers. We've already had a couple of people say hello in the chat, so good to have you aboard. This is our red light, green light call, and we're going to look at 3 deals today. And the disclaimer just makes an important note, which is on this call, we're not providing advice to any specific individual who's working on any specific acquisition. The people who submitted these deals for the most part are on the calls, but what we're going to talk about really isn't advice. We're just giving ideas. The purpose of this call is to see how experienced deal makers look at new opportunities, questions they form, and the strategies they might potentially pursue. I mean, if we're going to develop an actionable acquisition plan, we would have to get in a lot more in-depth information on the target companies and on the sellers than we're able to review on these short 20-25 minute calls. So none of this rises to the level of advice. Now, let's go to deal number 1. Let's get the numbers going. This is an interesting deal. I think Will's on the call. I didn't triple check, but I think he is.
This profile deal.
Yes. This particular business is a distributor of building products. Now, they're very specific: doors, frames, hardware, toilet, and bath accessories. This isn't residential. They're not putting it in your bathroom. They deal with commercial contractors only. So big projects, apartment buildings, subdivisions, healthcare, schools, multifamily renovations, that kind of thing. The trading area is in the Midwest. They do have some regional customers, but tend to be a little bit local as well. There is no property in this deal. They lease their facilities. The ask price is $2.8 million. Valuation, I think, is going to be a bit of an issue in this business because there is some variability. You'll see about that in a few minutes. The business has been for sale for a few months. Now, this business was founded in 2006 by the current owner, Vicky. Yeah, she's just kind of retirement age here. She's a baby boomer, and like a lot of them, she wants to retire. She owns 100% of the shares of this business. It is a minority woman-owned business, and that does generate 20 to 30% of the revenue. Now, that status doesn't typically carry from one owner to the next, but Will does qualify for this exact same category. He is a minority, and so the seller, Vicky, is talking to somebody she knows who's responsible for that to see if the paperwork could be eased in terms of going from one to the other, because the intention is to keep that status when Will acquires the business. Now, Vicky ran the business for many years. Recently, after 30 years of experience in the industry, she's kind of stepping away from the day-to-day hands-on. She hired a new GM to reduce her load and to be the sort of point person on this business and be responsible for the overall business. She is willing to stay in the business for a 6-month handover period. So Will's negotiating that. Her motivation for sale, Vicky just wants to retire, travel, get away from that day-to-day grind of being responsible for the business. There are 7 employees in this business. That includes Vicky. 3 of them are salaried, 4 are hourly workers. The businesses really vary. 16 projects were mentioned in 2019, 49 projects were mentioned in 2020. I did the math, looked at the average project sizes around 80K, but I get the feeling that some of them are a lot bigger, and then they do some smaller projects as well. So it's not like they all come in right around that size. More than 50% of the business is repeat business, just the same customers coming back to them year after year. They get plenty of referrals as well. They want to sell the business on a cash-free, debt-free basis. There was a pretty dramatic increase in the business, 2019. This starts at 2020 over here, 2021. This column here should be 2022. That's just a bit of a typo. And as we can see, it's a projection. This column right here, Carl, just to kind of put you up to speed. The reason why there's no add backs here, it's a projection. Based on based upon a 6-month run rate. So that is 2022, not 2021. Just a bit of a typo there. The website, I'd say, is average. It's light on content, but it does look fresh. It doesn't look old. It doesn't look dated. But not as much in there as I would have hoped to see. The seller is motivated to sell. As far as I can see, not driven by any urgency or distress. There was no real concrete reason why a sale has to happen according to any timeline. No sense of urgency that I could detect. And this is a deal where Will has developed really strong rapport with the seller. I have a few things I'm going to say about rapport in that context in a little bit, but I want to first throw it over to Carl. The numbers look great. 2019, which is not on the board here, Carl, was a much weaker year. So there was a big spike 2019, 2020, and nowhere did I really see any explanation, right, for why we had this dramatic increase in revenue and earnings. So other than that, it looks like a pretty good business. Will is really keen. I hope he's on the call because I know he would value the input that you'd have on this business. So what do you think?
Yeah, I really like this business a lot, and I really like this deal. I've just been on the welcome call for all the new proteges that have joined in the past few weeks. And we talked a lot about the kind of home services, the kind of construction industry, which, this business is like part of. So I think this is a great business that's just being fueled by, through COVID, a lot of people started doing more building and renovations, and this type of business. It's a distributor of products for the building industry, correct?
That's right, yeah.
Yeah, okay.
Distributor of building products, but very specific. They only mentioned 5 and 5 alone.
Yeah, cool. So those are all things that have been heavily consumed over the past 2 to 3 years. Obviously, they're selling into the commercial contractors, not the end users. So they've got the right kind of route to market. And obviously, they're competing with a lot of, the Home Depots of the world. But a lot of these kind of contractors that are doing these jobs, they'd rather work with a lot of these small regional companies. The numbers are amazing. Clearly, it's grown about 34% year on year. I think maybe in 2019, they were doing more kind of larger commercial contracts, which, they went from 19 projects, I think, to 49 over that short period of time. So I think they realized that their market was being dominated more by these kind of smaller jobs. So they pivoted to do that. The business is obviously growing very, very well. The margins are fantastic for this type of business. I've got a few questions around the add backs. Profit sharing as an add back. Normally profit sharing through distributions is done below the EBITDA line. If it's profit sharing through like some form of affiliate type relationship, that wouldn't really be an adjustment, would it? Because that would be a normal overhead or cost of sale you would expect to see.
Let's stop here for a second, Carl, because I think this would be helpful for some people. To my mind, you correct me if you think differently. I think of profit sharing, if I'm an actual shareholder, as a distribution of profit. That follows below the line. But if I'm an employee, I have no shareholder interest, and I'm profit sharing, that's an expense to the business, and that's above the line. Is that the way you see it as well?
It is. The question then would be, it can only be an add back if that circumstance is not going to reoccur under Will's ownership of the business. So if it's a profit sharing with employees as a real overhead expense that is truly above the line, which is correct, then for it to be an add back, then those employees would have to be leaving as part of the deal, which would be a kind of a little red flag for me. So I want to understand that. So I think, some of the add backs, of course, we need to drill into a little bit more. Clearly, let's say this business is going to do $1 million this year of real cash flow with whatever add backs they put in. They're looking to sell the business $2.8 million. Debt-free, cash-free means that they want to take the cash with them. There's no real long-term debt. So if they're going to pay down all the current liabilities, take all the cash, what I'd rather do on this deal is buy it with, at least a month's worth of revenue of cash inside of it. So there's probably $800,000 of surplus cash in here, which you need to add to the $2.8 million asking price. So really, that's not part of the multiple. So $2.8 million for the enterprise value of the business is a 2.8x times $1 million of probably true EBITDA for this year. That is a very, very attractive multiple for a deal of this size with these margins and with this level of growth. So this is a very, very strong deal for me, John.
Here, let me ask you a couple of questions, Carl, if you don't mind. Like, I put NN here for the new normal. If this is the new normal, this valuation is fantastic. But they've just got a big piece of business that caused them to have such a, sort of incredible sort of 2-year run. I'd want to be a little bit more careful, I think. I should have put or at least made a reference to what those numbers were. The year before in 2019, I think it was literally, they had like $80,000 of profit. Like, in 3 years later, they're talking about 1.3 million. Like, that's the kind of jump that they had. If it is a new normal, I agree that valuation is fantastic, but we probably have to check that out.
Yeah, and I think if you get into averages, I can't see it, it's off of the model, but if you get into the averages of the adjusted EBITDA or even the normal EBITDA, I think, let's have a look. Yeah, so you've got an average EBITDA of over $1 million. I think a 2.5 times multiple at $1 million of EBITDA with this growth and these margins, I think is low. But even so, that gets you close to the 2.8 million asking price. I'm going to say this, and this is crazy, but one question I've got in the back of my mind is, I think this business is undervalued. How many times have we said that on these calls? Not very often. Normally, it's a great business, but it's 3x what it's worth, way overvalued. We've had some crazy valuations in the past few months. This is a business that's not only attractively valued, in my opinion. I think it's undervalued, and I think there's multiple ways you could do this deal. I think a straight LBO would work because you've got so much cash, you've got a solid AR, you could probably do a decent closing payment and then a seller note. I think the SBA would be very interested in this deal. I think at 2.8 million for the business, you're probably looking at max 280 in equity.
Hey, Carl, do you think there's any chance that business is discounted a little bit because of this factor? I mean, the fact that Will's going to qualify and he's not necessarily going to lose that 20 to 30% revenue is a bit of a special situation, because it's worth noting, and I know that you know this because we've talked about it many times before, that is not something that you can continue. That's not business that can continue if you buy this business and you don't reapply and somehow or other get this minority woman-owned business status. So 30% of your revenue is going to disappear if I buy it or you buy it. If Will buys it, he's going to be able to maybe requalify as well, but for the average person, they wouldn't. Maybe that's part of why there's a little bit of a discount on the valuation.
Yeah, maybe. But I think one of the things you can do with that is potentially go find a partner, go find a GM that would qualify, and then you could retain that additional revenue. So yeah, that's maybe something that you would look at. She's just recently hired a new GM to reduce her load. Don't know whether that person would qualify for those special incentives, but yeah,
I think you have to be a shareholder.
Yeah, so I think I always mandate to make a GM shareholder anyway, just to change the psychology and the dynamic. So I think that's something that would need some further, exploration. But on paper, subject to doing some serious due diligence, I think this is one of the best deals that I've seen over the past few months. This would be a massive green light. It's not quite a golden buzzer deal. There are a few little things in here that need kind of checking out, but solid deal, Will. Good job.
Now, what about these margins? Are these margins within a range where we kind of feel comfortable, or are these just kind of suspiciously high?
No, not on the gross margin side, no. I think those gross margins are about right, maybe even a little bit low. Actually, you definitely want to see something in the mid 50s to high 50s in this industry. I think the bigger question for me is the overhead is so low. But maybe this is just a box shifting business. It's an import-export business, isn't it? You're basically buying in these things, you're warehousing them, and you're selling them out to customers. Although there are a lot of new business models now where a lot of this stuff can be shipped directly from OEM suppliers straight into the customer without touching this business. So this could just be a very lean, very nimble.
Well, I think it's sometimes hard to write this all up in one page, as you know. I think they do have some kind of design build capabilities as well. So they're not just getting a list of parts, finding them, shipping them, and they're being done with it. I think they're a little bit more involved than that. That there is some design elements to what they're doing. They're maybe a genuine subcontractor, not just a distributor. I mean, this is how it was described to me in the notes, distributor. But I think there's maybe even a subcontractor element to their business as well, above and beyond just being a distributor.
Yeah. Okay. So a couple of things I'm just gonna touch on from the comments, and then John, check in with Stephen Lapland. He's raised his hand. I know he's got some ideas in this business, but yeah, one of the things I was talking about is the sellers asked for a cash-free, debt-free deal, which effectively means that they want to take out all the surplus cash and pay down all the debt. So they're asking for $2.8 million for the business, and then this business has got $800,000 of surplus cash inside of it. And how I work that out is I looked at the revenue. You take roughly 10% to 1/12 of your total annual sales. That's the amount of cash that I would want to see left in the business at closing. And I obviously want the AR to stay in the business as well. So if you look at it, you could probably even add $1 million of surplus cash. Maybe I was a little bit mean.
Yeah, well, I mean, I did the actual formula. That's 1 month.
Yeah. So you've got over $1 million of surplus cash. So really, you can give the seller that cash. Plus, you could comfortably buy the business for 2.8, because I think it's a really sensible valuation. So your deal is really only 2.8 million, because the seller can take the $1 million. If this was a UK deal, the seller would take the cash at closing as part of the transaction, because they get entrepreneurs tax relief on the money at 10%. In the US, I don't know whether this is an S Corp, John, or an LLC, or whether it's a C Corp, but in the US, in most cases, the surplus cash, whether it's taken before closing or at closing, it makes not really much difference from a tax perspective. So, but yeah, do you want to get Stephen's thoughts on this, and then maybe check in with one or two other coaches, and then we'll vote, then move on to deal 2. But I like this deal a lot.
Sounds good. Okay, Stephen, you're on. Let's not, this doesn't apply just to Stephen, but for everybody. We keep our comments fairly brief. That gives us a chance to touch base with more people, but love to hear your thoughts on it.
Okay, brief. So I have been for 40 years in the construction industry. In fact, I even earned my way through college working as a contractor. But in the Midwest, where I live, the construction industry has been on an unprecedented high wave for the last 2 years. And one of the companies I run in that industry, I have contact with all the builders in my region, commercial and residential, and all of them are running on a high water mark that's like a 50% blast that we've had for the last 2 years running. And now we're starting to see a curve flattening as well as probably coming down. So one of the questions I would have about this business, although I love this industry, this is probably a great acquisition opportunity. I personally, if it were for me to buy, I would not go into this deal with our earn-out structure, because I think the volume's going to drop. And the other thing is that if it's a minority-owned business in the construction industry and they're saying they're getting 20 to 30% because of that, that probably means that's all government work, because that's the only place where they can preference it like that. And that is likely to be the schools, where they've been somewhat unprecedented levels of referendum spending. But now that the economy is turning, the voters are going to become probably more resistant to that. So in the due diligence process, I want to flesh those things out and find out how much the revenues are tied to really good long-term relationships with the builders. Because if you have good relationships in this industry, it's golden and super insulated from not losing customers. It's just a question of the economic swing exposure here. So that's what I wanted to say. And I can go on, but you told me to be brief, so I'll stop now.
Yeah, that's a great thought. That's kind of where I'm coming from too, right? We're on the high water mark, right? We've had this explosive growth in revenue and earnings. I'm not going to just take it at face value that that's the new normal without doing a little bit of digging for sure. Okay, let's...
Is Will on the call, John?
No, now that I think of it, I think Will told me that he couldn't be on the call. He was looking forward to the ticket.
Okay.
Unless you're here. Will, are you here? I think he mentioned that he was not going to be here.
Okay. Do you want to check in with somebody else, John, or do you want to...
Sorry, I'm just trying to pull up the next deal here. I got a little bit distracted. Let's go to Toby. Toby, you got any thoughts on this deal? I'd like to give us your red light, green light as well, and maybe a little bit of a justification on where you're coming from.
I wrote down green light 50, which is a high green light for me because I'm an optimist and I always think there's going to be a better one coming. But and I really like the growth. I'm thinking now, though, based on Stephen's comments, that earn-out structure is a good idea. I actually thought of that when you mentioned the big jump from 2019. So I think if you can get some kind of an earn-out, the owner wants to stay for a little while. So, or no, she doesn't want to stay. She wants to leave. And so I'm wondering how much of that...
She'll stay for 6 months, but that's it.
Yeah. But I'm wondering how much of the business is based on her relationship with those contractors that are coming in and buying stuff every week. And can you continue that? But I think it's a solid business. I think it's a go. Keep talking and make an offer.
Yeah, he was definitely making an offer. He's got a few things lined up here in terms of financing. There's going to have to be some equity put in this deal, and I think he's working on that.
Yeah,
But
the great thing about Will, John, is he has a family office.
yeah, no, I know he does. I think he wants to do the first deal outside of his family office.
Oh, does he? Okay.
Good for him.
Yeah.
I think his instincts are right on there. But yeah, obviously there's lots of flexibility for sure. Let me go to John Evans. John, we haven't heard from you, I think, in a couple of weeks. Anything
Yeah, I was just saying to John, happy wedding anniversary.
kind of give us your thoughts, John, maybe a red light or a green light, a number, and how you came up with that. We'd love to get your thoughts.
Fire. I'm back with you now. Sorry, I'm working off a different tablet and the buttons are in different places. And I like the deal, but I think I'd try and move it away from being a cash-free, debt-free deal and try and use that as part of a negotiation tactic. I don't know what the tax situation is in America with regards to the owner taking all the cash out of the business, but I know in the UK we've got this 10% entrepreneurial tax relief, so I would try and force them down that route to become more tax efficient. But I think it's a good business, good strong business. I like the balance sheets. I like the revenues and the growth it's shown. I'm not sure, picked up something you mentioned, there was a spike in the 2019 numbers, but you haven't shown them here. I'd want to understand, the business level. Obviously we had the COVID year, which would increase things, but I think it's a good business.
Okay, good. Thank you for that. Much appreciated.
There again, John.
And we've got time for one more. Geez, it's been a while since we heard from Stan as well. Stan,
Yeah, how you doing, Matt?
Hi, good to see you.
give me a red, green light and a number. And
Yeah, it's a tricky one with the women minority thing and how that would impact if you bought it and you're not in that group. But you could partner with someone, obviously. Yeah, I mean the question is for me is like, is she the business and how much is relationship driven? And in 6 years, would it be enough to have someone going with her and being presented as a new her to keep the business moving and growing? And having the relationships. Yeah, it's an interesting sector, impressive margins. So I would say green light 40-45 maybe. There's ones out there, yeah.
appreciate that. I had a couple of 911 calls with Will this week over this deal, and we obviously covered a lot of things. He's trying to find some equity. He's trying to find an equity partner. We talked about equity splits, the kind of headwinds that you might face. I said, but you couldn't expect someone coming in on an equity basis. They couldn't expect a bigger percentage because you're actually putting more money at risk because you're PGing the loan, right? So that kind of puts some perspective in terms of the kind of equity splits people should expect coming in, for the 10% or the 15% that they're looking for. And I guess the other thing that I think is worth noting is having great rapport with sellers very early in the game is pretty normal because they're not too sure whether you're going to come in here and write a check for the whole amount. You literally could be Santa Claus. They don't really know. And so anytime you're talking to somebody who could potentially buy your business, especially if they realize that Will's got some kind of a family office connection, that can drive a really sort of warm response that you're going to get from a seller or broker really early in the process. I'm not calling them insincere, but you have to be a little bit careful not to overvalue the sense of rapport you have very, very early in the game, especially if they're under the impression that you might be able to come in with a check to buy the whole thing. So Will's got great enthusiasm. He's young. I like his chances of buying this business, to tell you the truth. Let's everybody put our vote in. I'm definitely green light in this one, and I'm going to go green light 55 on this one. So green light means we want to pursue it. Red light means we don't think the opportunity is worth pursuing. And of course, the number just measures our sense of conviction, how strongly we feel about it. So if we love the deal, it's a green light 100. If we hate the deal, it's a red light 100. We very, very rarely get deals that hit those extremes. Every once in a while we do. Mostly green lights though, so Will's going to be pleased about that. Yeah, and especially if he can take the discount that might have been factored in there because of the minority women owned and then qualify it for himself, that would just be gravy.